So this is going to be break-in structure part two. So we are already in the last video went over what it is, uh, how we can implement it in our trading, why it is important, and what it can show us. So we're going to recap really quick what is break-in structure. Well, break-in structure is a is when we get a full candle closure above slash below a pre high or low. So this is important that we understand that we get a full candle. We don't just get price move up, right? We don't just get a wick above the high. We don't just get whatever above the high, right? It's not just a wick, it's the entire candle closure. And this is a perfect example of this on the daily time frame. So we see this high get formed right here. We get a down move and up move. We get this high formed right here, right? We have a down candle and up candle that creates a high. We mark the high through the wick. We can mark highs through wicks here. So obviously we see we get this high get formed. We get a complete closure above. What did price do? Continue to move up. Now, this only happens to be the case on the daily so often because the daily time frame is obviously much stronger, right? So if we get a full closure above on the daily time frame, it can suggest that we are going to continue to get price moving up bullish. It's exactly what we got. Is this going to look like this on the 1 minute? No. 1 minute's breaking structure usually is not a super strong confluence, but it can work for some people. This is another good example right here. We got a low. Oh, my magnet wasn't on. We have this low form right here. We get price. Obviously, we have a down move and up move. The up move created this wick, which created the low between the two candles. We get a closure below, and we continue to rally down the next 2 days. So this is, again, like I said, it's not going to be the same case on the smaller time frames, but you can get really good bias off of this. So on the daily, a good thing to look at, obviously, like I marked over here. Hey, we got a break of structure to the, we had a little bit of a consolidation. We get a break of structure to the upside, kind of rally out of this consolidation on Monday, Tuesday, Wednesday, Thursday was a drawdown, Friday. So this whole week was very bullish. So scaling down to the 4 hour, like I said, is very good for showing bias. So especially on the 4 hour time frames, we can see this a little bit more relevant. So not the past couple of days really, or actually yes, we have a good example of this. So uh, we see actually that was a liquidity sweep to the downside, but we see this low get formed here, closure below, rally down for the next few hours. This would be a little easier to see on the hourly time frame, but again, kind of gives us some sort of bias. This is kind of hard to see if you do the sessions, but if you just completely close it, hey, we get a complete closure maybe above a high, right? We get a high formed right here, right? We get this high. Actually, this would be considered the high. We get a closure below, we continue to rally up. So obviously with the 4 hour time frame and the daily time frame, you get really good bias for the day. So how you can implement this, like I said earlier, you simply just mark highs and lows and see if we get a break of structure. So a complete candle closure. Now there are ways to execute trades off of this. This is kind of what I look for in trades when I try to execute mine. Obviously, I don't wait for a closure below or above like a 4 hour high or low, but it is on the smaller time frames. So I'll scale down to like the 5 minute. Usually you'll see a lot of traders make execute trades off of these. I'm not gonna lie, but it's because they have other confluences that we haven't discussed yet. They are building blocks in place. They've already seen a liquidity sweep. Maybe they're in within a bearish order block. They're with an equilibrium, right? So they have a ton of different confluences that are already being implemented that uh, this isn't like necessary, but this is kind of the last thing they need to see, right? So we'll see here on the 5 minute, we see this high get formed, and then we see a rally up. So continue to move up. We got a complete candle closure. Now, are you guys going to click buy or click sell once you see uh, a closure above or below previous high? Please do not. You are not going to win trades, right? You're not going to win that many trades. Yes, you'll win a few here and there, but like right here, right? We got a really good example of this right here. We get this high formed. We have a couple highs, right? So we get closures above both of them on this candle. So we get a closure above this one, you try to go long, you get stopped out. You get a closure above this one, hey, we're rallying up, you try to go long, you get stopped out, right? This is just way too large of a stop loss to not get stopped out. So don't worry too much about that stuff, but just keeping it in mind that it's not a good thing, not a good idea to take trades just off of this. Is this a great confluence? Yes, it can show bias, it can show us when to execute. Is this good to just straight up execute a trade off of a 1 minute breakup structure? Absolutely not. So don't look for that. So homework for the day. So I'm going to run through the homework for today. Homework for breakup structure part 2. Find 3 examples on 3 different time frames where BIS worked and 3 times where it did not, right? So we already saw on the daily time frame, it does tend to work, right? We do see very often, more often than not, that when we do see a complete candle closure above or below a previous high or low on the daily, it continues to move in that direction, right? Versus we see here on the uh 5 minute time frame, on the 1 minute time frame, it doesn't happen that often, right? I spotted that really good example right here, how we did get a complete candle closure above this high right here, and we did rally quite a bit. But is that going to be the case every time? No, that's often not going to be the case. And it's even worse on the 1 minute because you get really misled on the 1 minute time frame if you were just looking at all these swings. Yes, it's a big swing. Yes, it moves a lot, but in general, we don't really see this very often, right? We see right here, oh, we get a closure above this high, bam, we move back down, we continue to rally back down. But I mean, again, like I said, it can work sometimes. Like if we have this right here, we get this high form, we do get a closure below, and we do rally up quite a bit. So um, again, it's something that just takes time to spot, but you can see how easy it is for me to spot these because I've been doing this for a while, and that's what I worked on, is just spotting these. So that's it for breakup structure part 2. I'm gonna think about what I want to do for the next uh, kind of building block that's a little easier to understand. I think I'm gonna do order blocks next, um, and then we'll go from there. So that's it for uh, breakup structure part 2.